Certainly. I mean, we are really in a recession. There's no question. The first two quarters here are negative, whether the NBR.
Okay, he's making the admission that we're in a recession, although the Fed's acting like we're not, but let's just move forward.
Calls that are not. Data was falling off really sharply in June. I'm interested in the employment report. And later today we have that service ISM report. The Fed.
The employment report was plus 350,000 jobs. Debatable statistic. There's been some dissension on that, saying that it's a lot of people getting second jobs that are already employed rather than decrease in employment. Anyway, let's move forward.
It has to be really careful. And I said that a few weeks ago, shocking people, because, I was the one that's saying they were way behind and should have been tightening last year. And as they didn't, the inflationary pressures built up, and then everyone said, oh my God, they have to tighten dramatically. And I think the market is almost over anticipating how much they're going to have to tighten. Look, all flexible prices. And now what I mean by that, the commodity prices, housing prices, freight prices that move up and down on a daily basis, they've rolled over. Now, the inflexible prices are wages, and they're still going up. They don't respond like the stock market.
So anyway, he was, in my estimation, talking about deflationary pressures in the economy rolling over, meaning prices going down for those variable, those items that have prices that can go down quickly. Wages cannot. Let's just go on.
The gold market. So we're going to see those wages continue to rise. But really, the anticipation of the Fed tightening and how high they're going to have to go, I think is almost excessive now. I think the Fed has to be careful. I monitor the money supply.
Now he was just talking about the Fed having a change of heart, and that would be moving quads into the deflationary quad with a lower. In that previous slide there, let's just see if I can go back to that there. Energy prices have fallen, I believe, since this has come out, and I believe used vehicle prices have fallen as well. Anyway, let's just get back to where he was.
Monitored the money supply, and that told me that we were going to have all this inflation that we had. Well, the money supply has been brought to almost a dead stop this year, and that is unprecedented. And I said, 3 weeks ago, the Fed has just got to be careful not to slam on the brakes and just crash this economy. They've got to watch things. Yes, they have to raise, they have to ratify what's going on, but they have to realize that most of the inflation now is behind us, even though it's going to be going through the official statistics over the next 6 to 12 months.
Okay, and I think this is what Kathy Woods and Tom Lee and the other analysts that I was talking about in the last video were talking about, that the inflation has gone through. The statistics not only are not totally accurate, but are also, a quarter late on inflation and so forth. Let me stop interrupting.
Isn't that sort of the dynamic that you described in terms of wages remaining sticky and going higher and inflation rolling over? Isn't that a recipe for demand not necessarily to be destroyed as much as the Fed needs it to be in order to fight inflation longer term?
Well, I think that what's happened is because wages have not kept up with inflation. And really,
if inflation rolls over, then can it?
Well, what we're going to see, the sensitive, don't forget, the sensitive prices went up 20, 25, 30%. The CPI, as recorded, is up, 8%, 9%. So those prices are sort of coming down. They're still, workers have still lost a lot of purchasing power. We know about the decline in the stock market. We know the pessimism that we see in these, consumer reports. All these things are adding up to the fact is, yes, the Fed has to do some more tightening, but maybe they're going to don't have to go to that 3.25% that the funds rate is projecting. We might get a debate about whether they're going to go 75 at the end of this month.
Okay, this is exactly what Kyle Bass had mentioned specifically, and you can look back a couple of videos of mine. He felt that this would be exactly what the Fed is going to do. That a 75-point basis rate hike is going to be too high. Will they cut back? Will they not do a hike? Will they go totally dovish? I fudged that last video and said that, that forecast would be for Q4, the end of the year. If they go totally dovish and do not raise rates or do just a gesture of a raise, then we're going to be moving into quad one. See the previous video on that. Let's just hear what he has to say.
The data continues weak, and if the data gets really weak, there might be a few people there saying maybe we should do 25. And that's a shocker, I know, but I'm just saying that, my look at the dollar. Look at Dominic was saying about, this is incredible. A 15% rise, that is an extremely tight market. That money is flowing in to get the high real rates that we have right over here in the United States. Real rates of interest have jumped up so much higher than the rest of the world. Hot money goes here. That's a deflationary also signal that's going on. Fed made a bad mistake, put in too much money. Can't slam on the brakes right now. Well, they're going to have to watch a lot of indicators.
Anyway, that I thought was very interesting. Jeremy Siegel of Wharton has confirmed the information that was presented in the last video, the macro analysis of the NASDAQ 100. All right. So as this pertains to Lordstown Motors, more favorable for a capital raise should they want to issue stock with the extra shares. Okay, this is MXUX. I'm just going to talk over this. This is a video Pomp did about Bitcoin miners selling their Bitcoin, to pay their utility bills and other things, which was mentioned in the last video I did. And this is from, I believe, 3 days ago. But just another confirmation on the state of the crypto market. And I just want to say that, Pomp wearing a suit and tie, with his hair all screwed down like Frank Sinatra, that's got to be an indicator too. Anyway, I just wanted to take this minute just to tell you a quick story. I was out to lunch the other day. This was last week. And sitting at the table next to me, I don't know who they were, and I'm not going to say what the coin was, but anyway, there was a venture capital guy and a young guy there. Let's say the venture capital guy was 30 years old, 35 years old, and let's say the young guy was 25, okay? And the young guy had a team, and they were talking about bringing new talent on the team and managing the team and meeting deadlines and getting this. They are, I guess, minting a crypto coin. And I found it very interesting. The venture capitalist was, pressuring to meet deadlines and meet schedules and, keep the project on track and so on. And they wanted to get it out as quickly as possible. And there was funding was discussed. I was overhearing all this. I'm not talking out of school because I'm not going to tell you who it was. Anyway, it struck me as funny because this young guy who was running this crypto operation and with the coders and so on and so forth, he and the venture capitalist, and I just want to put this out there, I don't know what it means, they never spoke about a use case for the coin. They never spoke about, you know, the valuation or how it would be valued, or all they spoke about was getting the coin out. And this venture capital guy was talking to this young guy, and he's going, what is your exit strategy? You know, what do you want to get out of this? How much, you know? And the kid goes, well, I want 10 million. And we want to, you know, we want this to launch. And the other guy was talking about marketing the coin or the token, whatever the case may be. And he was telling this guy anyway. So what the whole thing was about was, you know, let's get this thing done. Let's get this thing launched. And the head developer, the head of the coin, the token, whatever it may be, was talking about exiting, his exit strategy, because he wanted to get it up, get it running, and get out. And, you know, the venture capital guy wanted to get up, get this thing done, get it out, market it, and get out. So I just thought I would share that. That was some real world intelligence there. I don't know what that means. You know, it made me think, because I was involved at one point with a company that was developing gaming. They were a gaming company, electronic gaming company. And it sounded a lot like those meetings. And I was wondering, you know, is crypto the new, you know, gaming? Is crypto the new Xbox? Is crypto the new Doom? You know, is this younger generation, and I'm an older generation here, are they looking at these screens and these charts and their charting patterns? Is this the new video game? Are these the new video games? Or has crypto been gamified? I don't know. But anyway, I thought that was very interesting. I can remember back at the beginning of crypto how the descriptions were a little different, and you know, Pomp still talks about how it's going to change the world, the world and so forth. Excuse me. I'm bullish on BSV, but do not buy VSV. Do not listen to me. But I think BSV has the most real-world use applications of the blockchain, and they've got a lot of patents and stuff. You can look into that on your own. But, you know, absolutely no discussion of any real-world use case, you know, benefit to society, all that stuff. So anyway, I just thought that was very interesting, and this was just slightly before all the crypto really crashed big time. But just give you a little insight into, you know, I mean, this was a token. I think this was definitely a for real conversation, and little eavesdropping by me, you know, unintentional, but you know, they were talking loud, and you know, I was a couple tables over, and I happened to hear them. Anyway, yeah, so that was the talk on that. I don't know the coin. So anyway, just thought I'd spread that. I think that's indicative of what's happened with a lot of these exchanges and a lot of these coins. And I think everybody was looking at their exit strategy and, you know, not paying attention to the macro and so forth. Anyway, a little cautionary tale to everyone out there. All right.